All right. Good morning, guys. Today is Tuesday, April the 25th, and as usual, we'll be going over analysis for US 30, gold, and EU. Looking back at what happened yesterday after the live stream, we had anticipated gold to go up, and we had drawn a markup for gold yesterday. I think I posted it in the group. I don't know if I posted it in here. No, I posted it in the general chat. Yeah, so we anticipated gold to come down and pick up liquidity before I move back to the upside. And ideally, yesterday for gold, what we are concerned about is the trend line on the hourly. So that's what we were using because we had drawn this trend line to the upside. No, was it that? I don't, this is the 1 hour. There's an hourly. Oh, I'm sorry. Yeah, no, not this one. Even though this one is still, actually, I'll leave this on, but yesterday this one had not been established. So the one we were trading with yesterday was from this lower low to this high low. And during the live session, this is the candle that we were trading. So after this candle closed below the trend line, I said, if you're looking for any sales, you had to wait for the next hourly candle to close. And if not, because ideally I did say you can easily get faked out. So these candles that close above or below a trend line, it's always best. You can do a quick snipe and catch some rejection. Like right now, gold is testing this trend line on the hourly, but you can catch a little bit of rejection. But for any re-entry, you always want the next hourly candle to close. So right here where gold is, sure, you can catch a little bit of a buy, a quick buy. But for a long-term buy to be safer, you want this hourly candle to close, because like for yesterday, yes, you could have caught a retracement because price did retest the trend line and then dropped back down. However, when price came back up, it blew through the trend line and closed above the trend line. So you always, after, especially this is the hourly time frame, and also even in the 5-minute time frame we trade, after closure above or below a static trend line, an established trend line, you always want to wait for the next candle in the time frame that you're trading, the next candle to either close above or below that trend line to enter into any buys or sells. So here gold went all the way back up. See if we have any trend lines on the 5-minute. Also, I'm heavily up for the day. Last night I made ideally a 7.5% trade, but I'll go over that trade. But I did mention what to look out for the trade that I did enter. So let me just draw the trend lines as we wait for the market to stabilize. So that's what we have on gold, and then we have this trend line to the downside. So I don't like the trend lines on gold, but right now you can see gold is coming from a supply zone. US 30, what do we have for US 30? We have this right here. What do I, yeah, so we have that one right there. And then we have this one to the upside. So I like the trend line on US 30 better. EU, so this is the trade. I took a heavy sell on EU last night. So remember yesterday during the live session, I did say we did have a bunch of supply zones on EU. And I did mention that EU was more than likely going to break through. So we had a bunch of supply zones in here that EU had been breaking since last week. So I did say that I was anticipating EU to continue going up. We hadn't gotten any bullish zone for us to ride price up. The only bullish zone we had was the 15-minute bullish high, but this came before the live session. So when we were trading the live session, price was around this zone. So I did say the best thing you could, oh no, actually, no, it wasn't all the way there because this happened. Yeah, so when we were trading the live session, price was down here, it wasn't up there. When we were trading the live session, we only had the 15-minute, yeah, so this is the 15-minute I'm talking about. So we only had the 15-minute bullish highs and bullish lows, but we also had the 30-minute bearish high. But I did say if you remember the last few days, the EU charts were all red. So we were in heavy supply zones. But I did say for EU, it's better for you to wait until price closes below the 9 EMA on the, which is the reversal strategy. And I'm having a system built for that. Actually, some of the notifications I'm getting might be from my programmer. So I did say, as much as we didn't have any way to write price back up, yesterday we were in heavy supply zones in EU, but I did say it's better to just wait for when price will close below the 9 EMA and then retest and close below the 9 EMA. So the first time it did so was around close to market closure. And one of, I think it's Levy in the group, you tagged me and said that you had also entered a position based on the reversal strategy yesterday. So as soon as I got that tag in, because I was done trading for the day, I just came back to the charts and then saw that. And then that's when I entered my first 30 lot. So I did a 30 lot sell on here. Now, the other thing I realized, so this happened in and around market open. So if you get a trade during market closure, because it happened, I think this entry was around 4 p.m. EST or something. So price actually started coming down a little bit, but when market opened during Asia session, price trended to the upside. So in future, just to be safe, for the reversal strategy or for any other strategy you have or we are using, if it's around market closure, and you can do a filler, or not a filler trade, because ideally you can make, so these are some of the trades you can take, 4 reversal trades a month, and you can easily pass any challenge and win all of them. But here, so like the way I used the 30 lot, I was in drawdown about 8 grand or something by the time price was above here. So in future, you can, if the entry comes before market closure, like right around market closure, go ahead and use maybe half the lot size you'd have used, and then wait for a confirmation. So what I did here, I did my 30 lot, made a little bit of profit, but I was aiming to do like 9 grand or something in profit for that trade. So during Asia, price continued trending to the upside. So it's the same thing, right? You wait for the next time price closes below the 9 EMA, retest and closes below the 9 EMA. This was the next zone right here, which I think is where I entered 548. I think for me, I entered either here or here, but I did enter, I think personally I did, let me see, we can easily see, because I did send that in the results today. I entered the second position at 1.0625. So for me, I entered up here, 625. Yeah, I just waited and entered up here because price was trending so heavily. So it's always best to wait for, and you can always average down. So around 1.0625 here. And also actually what I did, I came back to my charts, because if you remember, we also had supply zones in EU still up here that needed to be tested. So I just entered my next 30 lot here, and honestly, I just went to sleep. So this morning when I woke up, price was all the way down here. So that's how I was able to make 7.5% in one trade. But of course, that's not going to count in this recordings we have, because it's not a trade I called as an official trade. It's just a personal trade. And I'll start looking out for those trades that come out after live sessions and send out possible entries. Yeah, but during the live session yesterday, I did say wait until price closes below the 9 EMA, retest and closes below the 9 EMA on the 5-minute, and go ahead and enter your trade. And you can see EU is dropping heavily. Again, this is one of those places, right? I can be like, oh, if I never closed, I could have been up like 20% or 10%. I mean, how many people make a 7.5% return trade? So yeah, so that's on EU right now. What is likely to happen on EU? And I think markets have stabilized. So you can see automatically, what do I see? Structure, right? So the first structure to be completed is around this 4-hour bullish low, around 1.09799. You can see we are coming into we're coming off of a demand zone, but right now I can tell EU is heavily bearish. So I'm just curious what is around 1.09799 area, 1.09799. We have the weekly open. We have the 4-hour bullish high. We have Friday high. We have the weekly open. We have the previous weekly open as well, and previous something, and also 4-hour bullish low. So what do I see on EU? Same thing as yesterday, right? So no need to get smart. The same pattern as yesterday, but the opposite. So maybe here we get a bounce, and then you always want to see where is price likely to head. So for me, if it's a buy, I'm more concerned. If this EU is to complete structure, I'm more concerned about where is the next demand zone within a demand zone. Just the demand zones by themselves, they just show me where I need to look next. So around this area, 1.09744, I would be looking for the same thing as yesterday. Wait for price to close above the 9 EMA, get a retest and closure above, and guess what? That will be around the demand zone within a demand zone for our bullish low, and then move back up to the upside. So same thing every day. Gold is coming off of a supply zone within a supply zone. We have an hourly bearish low. We also have I'm sorry.
Sorry, can I ask a question, please?
Mm-hmm.
Can you show me, please, how do you put an alert so that when the 9 EMA is above the price?
Mm-hmm. So just right click on the chart and then do condition. So this will be the instrument you're trading. And then unless it's, no. So if you already have the EMA on there on your chart, select EMA. So here would be that EMA. And then you just do crossing, what is this? Entering channel. Give me 1 second. Let me check what I have on my, I know how to do it, but I need to see the parameters.
I was confused about
so it is, so, oh no, my bad. So this one, you'll do this, add alert, the instrument you're trading, crossing, right? Leave this crossing and do the EMA. So select whatever EMA you're using, and then you want this to fire when the bar closes. So whenever you get confirmation of closure above, and then you can name it whatever you want to name it. So you can name it EU crossing, the 9 EMA, or whatnot. So that's how you set that alert for. So the instrument you're trading, crossing, and then that EMA indicator, so whatever EMA indicator you're using, it's better to do once per bar close. If you do once per bar, once per minute, you'll get a bunch of dings or whatnot. So for me, I always use once per bar close so that I get actual confirmation. And then you can name it whatever you want to name it, and if you want to give it a message, but that's how you do it. And then under notifications, you can do notify on app, or show pop-up, or send email, play sound. So whatever it is you want to configure your notifications on.
Okay, thank you, bro.
Yeah.
Another question, for the reversal strategy, like for the trade you took last night, what was your risk? Like you were,
I did a 30 lot. Ideally, when I'm taking such trades, I'm risking my whole daily percentage, because I'm only looking to take 4 of those trades a month. I'm not using, so I was actually risking 4.5%. So you don't have to do that. Yeah, but I was going through, because I knew that the other thing, you always want to see where price is around. Yesterday, for the last few weeks, for the last few days we've traded, EU was heavily in red zones, right? So you guys remember me saying, I don't feel like trading EU today because the charts are all red, or I just have supply zones within a supply zone. So if I was entering a sell here, even though price went against me for like, maybe it went to like 2%, 3% drawdown, I knew I just needed to wait for a reversal. And also, the only other thing, if we had demand zones up here, like a lot of demand zones, and daily bullish highs or whatnot, I would not have used the 4.5% risk. But we had supply zones within a supply zone. We had supply zones, and the only bullish zones we had were hourly bullish zones. So to me, and I was expecting my stop loss was somewhere above the monthly high, because I did say during the live session yesterday, price should come around this zone. If you're doing a stop loss, you can do above the monthly high. So to determine the risk you're trading, not every time, right? Today we might get this trade, but am I going to use 4.5%? Let's see. Maybe, let's see, am I going to use 4.5%? No. The reason for that is because as much as we have demand zones and demand zones within demand zones, you can see we also have a bullish zone here. right? We also have a supply zone here that's actually a huge zone from 1.10121 to 1.09447. We also have supply zones within supply zones. But yesterday, we did not have any demand zones in that supply zone, not even one demand zone. So you always, same thing I said yesterday, you always want to see what is surrounding price. That is what's going to determine or help you determine whether price is the probability of your trade. So I can say I use 4.5%. But right, if we had demand zones in there, would it have been wise to use 4.5%? Probably not. But yesterday, yes, my risk, I was risking ideally my full daily drawdown for the day. So the thing that should always guide you is look at where you are in relative to what's around you. So relative to the order blocks, relative to the supply and demand zones, and that will ideally let you know the percentage you should use. If in doubt, always use a 0.5% risk. At the very most, even though you're taking these heavier trades, like that one I took yesterday, for you guys, I always say, don't use for any given trade, never use anything more than 1.5%. Don't ever risk more than 1.5% in one given trade unless you know what you're doing. So for me, I was comfortable reaching max drawdown yesterday, but I also knew that my trade was highly probable. So that's why instead of doing 1.5% risk, I did a 4.5% risk in order to make like 7.5%. So
you were it was like 30 pip stop loss, like?
Yeah, I think I had like a 30 pip stop loss or something, 30 or 40, one of those two.
Okay.
Yeah. So US 30 here, ideally, I'm just looking for sales. The reason for that, we have supply zones within supply zones. But for me right here, honestly, what do I see for US 30? This is a pattern that repeats itself. The only demand zones we have here is this 15-minute bullish high, bullish low. But in my experience trading US 30, I think US 30 is going to go higher at this point. Because, right, yesterday we went over, you always also want to see how the candles have been playing around. So the candles have been closing above, so they've been having higher lows. So for me, right, you need to think about where is US 30 likely to head for any reversal to the downside. So up here, you can see we have supply zones within supply zones. We have a 30-minute bearish high. We have the current weekly high. We have Friday highs. So for me, US 30 is more than likely going to keep pumping to the upside. I'm just looking to see if I can find any entries. So gold and EU, give me 1 second. US 30. Yes, I do see US 30 going to the upside. So for any entry for US 30, we need to see what's next. Also, we do have this 15-minute high and lows. Personally, I don't trade. Remember, I don't trade 15-minute zones just by themselves. I always want to see what else is around. So we have a 15-minute high and low, bullish high, bullish low. Down here, we have the hourly bearish high, hourly bearish low, weekly open. We also have a 4-hour. Wait, let me see what this is. We have a 4-hour bullish high down here. So this would be, I do see US 30 pumping to the upside. The only thing is that the only zones we have are not high probable zones. So for this trade, I'll be looking for price to come back down here and I'll enter a buy, but you always want to see what's the optimal area. So if we get into this position right here, where's our stop loss? So our stop loss is normally what, 50 pips TP, 50 pips stop loss. Right there. 50 pips, 50. So the stop loss is below. The only issue with this one is the hourly bearish high and hourly bearish low here. Yeah, but I'll wait for this trade. Based on previous experience, I do same thing as yesterday, right? Yesterday, the buy I took on US 30 yesterday was the similar thing at least for yesterday, we had an hourly bullish high. But based on what I'm seeing, if they're gonna go and pick up liquidity to bring US30 back down, we have all these sell zones in here. So I do see price going to the upside. So I'll just wait for US30 to come down here. For this trade, I'll risk 0.5%. Or for this trade, the risk will be 0.5%. Since I'm already up 7.5% for the day, personally, I might go for a higher risk. But this is not a trade I would encourage anybody to go for a higher risk. Because ideally, we have supply zones to the top, but we tested. That's why I entered. That's one of the reasons yesterday I entered that buy personally without calling it, because I was just testing how theory I have with US30, how price reacts at this, even at supply zones. So I'll just wait for price to come back down there. So gold, we have a 4-hour bullish high. So remember how we trade these zones. 4-hour bullish high, we have to find the 4-hour bullish low. So the zone, so ideally, right, we break these zones down into two. So right here, actually, there should have been, you can enter a filler buy, because this zone is 1985 to 1970. I'll call it 75. So that's a 100 pip zone. So you enter your first buy. So if price comes down here, I'll enter a filler buy on gold. Because we've traded this pattern in the past way back, and we had such a huge win rate. So it's a high time we bring that trading strategy back. So 3 ways, break it down into 2, and let's see, US30 is still there. Gold, break this down into 2. This zone, so 1985, so this would be around 85 to 70. I'll call it 75, so around 80. So around 80.
How far are you waiting for US30 to go down so I can watch it for you?
I'm sorry?
How far are you waiting for US30 to go down?
So ideally coming to the 200 EMA on the 5-minute.
Okay. All right,
Yeah.
cool.
All right, so there's that, thanks. And then we have, so this would be the filler buy on gold, where gold is coming. So a filler buy, risk is 0.125%. I use 100 pip TP, 100 pip stop loss. The next buy on gold is around 1982, and the last buy on gold is what's the bottom? The hourly bullish low is at 1981, 1980 area. So, and for this one, you can use a, all right, so the first trade, filler trade, risk no more than 0.125%. So 0.125% is the least risk I always go for filler trades, or that's the risk I go for filler trades. Right now, gold on the hourly. Let's wait for this hourly candle to close. So this hourly candle, if let's see how this hourly candle closes. But ideally, these setups are still valid. And you can see, right, this is what we always want to see. We want to see price rejecting from this order blocks that we always have marked up, right? So you can see we have a rejection from the 4-hour bullish high. So
I think we missed US30.
No, price didn't come back down, so it's fine. If it goes up, let it go up. But so I'm waiting for price around the 4-hour bullish high. So this was, unless this is a new candle that just opened, no. So price didn't come back down because this candle is
that's a new candle that opened on the 5-minute. That's why I think we missed it.
Yeah, I mean, yeah, that's fine. Let it, if it goes up, that's fine. Actually, the best trade I would be waiting for is the sell up there. But yeah, if it goes up, then that's fine. The other thing, so keep in mind, for me personally, I'm up heavily for the day, so it's up to you. So I've already drawn this thing for you guys. I said always look at the candles that are before. So even though we're in supply zones, the US30 has just been trending to the upside. We just have higher lows. So each previous candle is closing higher than the previous candle, right? So look at all these 5-minute candles, they're closing higher and higher. So, and I did experiment this for you guys yesterday on the live session on the buy that I took, and I made like what, like 3%, no, like 1%, no, maybe 2%. Yeah, so even though we're in supply zones for US30, I think it's the only asset that I would try to buy when it's in a supply zone and vice versa, so long as it's meeting all these other conditions. Because as far up as you think US30 is up, it can always keep going higher and higher. So to me, the probability of US30 continuing to the upside is higher than it sinking to the downside for now. So let me delete this trend line to the downside. Yeah, so and I was saying that around the 200 EMA, so always do the math. So the 200 EMA was around 33,787. Price came down to around 33,790. So that's only like what, 1 pips, 2 pips. So you can always enter such a position early. So really, I don't think I've ever made a markup or I've ever brought this long and short position on the charts and then didn't enter the trade. When I bring this on the chart, it means that I'm entering the trade because I've identified a zone. So yeah, don't miss a trade because of 1 or 2 pips. It's not going to make or break your trade. Yeah, so now the other way I can enter this trade is if this candle closes above. That would be a risky trade in my opinion, because we can enter, if this candle closes above, ideally you want the next candle to retest and close above. But when this candle closes above, I will go to the 1 minute. And now this is, to me, this is a very risky trade, but I still like this, that the 50 pip stop loss is below the trend line. So when this candle closes, I'll go on the 1 minute and then I'll see how price reacts on the 1 minute. So right here, delete this. US30. So, and I've found that during this trend lines on the hourly also heavily help. Let me see, I do have other. Yeah, so just monitor that. And there you go. Let's see. It happened so quickly. So still, it's of course riskier than it was. Yeah, I missed that trade. So I don't know if anybody caught that, but I didn't get a chance. But we did get that reaction or retest
Jumped in a
of
little
the.
late, but I'm in there.
Yeah. Yeah. So yeah, for today, you guys, if I mark these things up, go ahead and take them. I'm not in a hurry to make money. I'm already up 7.5 for the day. So I have really nothing to do. So there you go. That would have been a quick trade, right? Because I say, so for static, so the only exception for trading this way on trend lines is do not trade this way using a trend line that hasn't been established, right? A hanging trend line. But so long as a trend line is established, you can hop in on impulse or just go to the 1 minute. So if we go to the 1 minute, we'll see that perfect retest, right? So if we go to the 1 minute here, and even in that trade, go ahead and set break even or secure some, right? So this is what you want to see, this perfect retest around that trend line. So that's why I said I would have gone to the 1 minute and then seen how the 1 minute had worked around that zone. And there you go, right? Easy trade. As much as we are in sell zones, US30, I've seen this pattern a lot of times, especially this pattern that you have squeezing, right? Price is trending to the upside, so ideally you end up with a squeeze. I've seen that many more times than not. But there you go. So this trade should be at break even. And depending on what you secured with, and look at where price is rejecting from, right? Look at the chart to my right. We have this trend line on the hourly. So that's why I've started also drawing the latest trend lines on the hourly, because you can see right here. So here is also some place you can catch a quick rejection, right? So these are also areas you can catch quick rejections if you're a quick scalper. So for example, let me test out something. No, but it's so far away from that trend line. But yeah, so these are established trend lines. You can scalp in and out any direction from them, but you only have one shot. So long as we are not around heavy news or whatnot, get in just once. Don't do it. So like here, because I'm trying. Well, I don't want to hop in at this point, but I wanted to sell with a big lot around here. But for such established trend lines, you have one shot to take it. Now, if it's in the direction of bias, so let's say we have, so we also have supply zones up here, but let's say we also had other confluences around here. So maybe like an hourly or 4-hour bearish high here. Yes, you can hold the trade for like 50 or so pips off of this hourly trend line. But right now, we just have a Friday high. We have some supply zones within a supply zone. So it's not a sell. I would have said to hold for like 50 or so pips. So for this one, you could have done like what, maybe 10 pips or 20 pips with a heavy lot size, and then you could have gone in and out. So I actually wanted to sell 100 lots up here, but since I missed my one shot, and that's what I'm saying, for that particular strategy, you only have one try and one try only. If you want to go for multiple tries, well and good, but to me, US 30 is heavily, or is turning to bullish right now. Where do I see it going? Right, you always want to see what's around. So this is only just a supply zone. We have supply zones within a supply zone here at 33,870, 33,879, 880, 33,900 area, 33,930 area. So US 30 ideally is trying to come up and take off all of these zones. So right now I'm actually not trading like a retailer. I'm just trading like I'm thinking like a bank, and ideally using price action. Yeah, but even in that trade, hopefully you made some money or you at break even. Gold, God, did anybody catch gold? I missed gold, but I did mark this up. So I did say for this trade, 0.125%. So if you did enter gold, depending on whatever lot size you used, whatever risk you used, you should be in profit in gold. I did mark this up before this happened. So gold is up 1985, 1988. Gold is up 30 pips. So this is 0.125%. We are closing above the trend line right now. I'm sorry, above the 9 EMA and also above this hourly trend line. So this is an opportunity to scale in. If this 5-minute candle retests the 9 EMA and closes above, it can be an opportunity to scale in. However, you do see we have an hourly bearish low here, but we also have an hourly bullish high. The only other thing is that we have a supply zone within a supply zone. But if you hopped into that gold trade, you should be heavily up in profit, about 30 or 40 pips. And there goes US 30 still. So yeah, so hopefully you guys took those trades. For me, I'm not in a hurry to take any trades. I'm already up for the day, so I don't really care about myself at this point. And there goes US 30. So at the very least, so at this trade, what did I say? 0.5%? Yeah. So this trade was 0.5% risk. Gold was 0.125% risk for the filler trade. The next buy on gold is around 1981.20 area, plus or minus 1 or 2 pips. The last buy on gold is around 1977.80 area, which you should use a bigger lot size. So for this one, you can use 0.125%. The next trade, you can use 0.25%. And then the last buy down here, if you're still wanting to catch that trade, you can enter with a 0.5% lot size. And just to piggyback, how do we go over this particular trades, right? So when we set up these 3 trades, we are looking for this strategy to play out. We are looking for this path. So once you get filled in on the first trade, in which case at this point we got filled in on the filler trade, or if it comes back down, I'll enter personally on the filler trade. But since I have a heavy buffer, personally, I might not go for a 0.125. But you want to see this, you want to see some rejection. So ideally, the filler trade, you're not really looking to make any money from it. So the filler trade is ideally just trying to show you if the analysis is holding. So you can always take profit on the filler trade if you want. If on the other hand, you want to go in with a heavier lot size, so long as you're risking the same amount, no more than say 0.5% for the first trade, you can take that risk. More times than not, this pattern that I'm drawing off, this strategy has worked out in the past. So sometimes you might get faked out, but more times than not, you win using this strategy. So we had this 4-hour bullish high, bullish low here. We divided this zone into two between the bullish high and bullish low. So the first trade is a filler trade. I don't look to make money from the filler trade. If I make money, that's good. If I don't, then that's fine. Since the filler trade, you're risking 0.125%. So this is what you want to see. You want to see yourself getting filled in and having little to no drawdown and price going back up. Now, when price comes back down and the second entry, you want to see it. Now, the second entry is where I would be looking to make money, the second and third entry. So you want to see rejection to the upside. Hopefully it goes and hits TP or goes close to TP. And then when price comes back down, you don't want to enter where you entered the first position. You don't want to enter where you entered the second position. You now want to enter at the bottom of that channel and then expect price to shoot all the way back up. So that is the pattern you expect.
retesting the EMA just in case you wanted to get back in.
Yeah, no, at this point, I don't think for me it's worth the risk. Let me see. US 30. Yeah, US 30 is still bullish. What do I want to do? So if you guys are in this position, you should be out at break even. So that this trade ran up about 90 or so pips. Yeah, I'm not gonna re-enter. I need to see how this candle. Anyway, so if I miss a trade, I'm not gonna try and, because more times than not, if you miss a trade and then price comes back down to your entry, you start justifying or looking for reasons why the trade is still valid. So for me, I'm not gonna enter this position right here. So this trade went up into profit. So even though I'm pretty sure we could have made money there, for now, I'll record this as break even. But if I was trading that trade, I would have taken profit all the way up there, or I would have secured half and then taken profit. Yeah, so personally, I'm not going to re-enter this trade because I feel like at this point, my opinion for this trade is, well, the trade played out, and that's all that matters. So ideally, just look for the next trade that comes up. EU, so right, this is what I want to see for EU. I don't even want to see any retracement for now, because I want this pattern to play out. And that's the same thing I said, right? I always look at structure. Price, nowadays, trading does get easier over time. So another thing I can see here, we have that, right? If you draw this trend line on the hourly, look at what happened. Price closed below the trend line, retested, and now price is dropping. Where is price dropping to? Automatically, I can see a structure on EU on the hourly. The first structure is right here around 1.0. 9766, 9799 area. So this, price is still playing out exactly as I expect it to play out. So it's no hurry. I'll just wait for this to play out, and I'll do the same thing I did yesterday. And there you go, US 30 dropping heavily. This is why I did, if a trade plays out and you're late to the trade, don't try to justify your entry. Just wait for the next one. Yeah, so just keep observing the charts. I have other accounts here that I'm trying to see what's going on in them. What account is this? Okay, that's fine. Yeah, because I trade a bunch of accounts, so I always want to make sure that all my other accounts are not being affected by me being on the live session. Which account is okay? No, that's fine. I don't care about that. Perfect. Yeah, so right now things are bearish. So that's why I didn't want to FOMO or just hop on. And that's why I say, like, this little sticky note that I have on my monitor that just says stick to your strategy. I just looked at that and said, you know what, if you already missed that trade and you're already up heavily for the day, there's no need for you to try and re-enter that trade. I'm in some other trading groups here. I'm seeing some people saying how today's markets are trash. See, as much as sometimes markets can move in weird ways, remember that, you're always going to have bullish candles. You're always going to have bearish candles. So at most, you'll hear me saying that the market today is sideways or it's lacking liquidity. That doesn't mean markets are trash. There's always a trading opportunity. So that's another reasons why I stopped following some of this other people that I used to follow, because I don't want to trade with somebody who thinks that markets are trash. You'd rather say that there are no opportunities in the markets today, but saying that markets are trash, to me, that doesn't make any sense. Give me 1 second. I'm just going over some of these accounts. If you guys have any questions, feel free to go ahead and ask. I'm just going over some accounts I have. And like the challenge I'm taking for somebody else. Let's see. Which account is that? Trying to think. EU is dropping heavy, which is perfect for us. GJ is also dropping heavy, which is also perfect. There's an account I'm missing here. I think it's this one. One second. Okay, that's fine. Yeah, so EU, so let's look at that strategy, right? So EU has fallen, this is 232. So this is 40 pips. So this counts as a trend. For my reversal strategy, the reason is price is consistently down below. The last time price was consistently above for 2 consecutive 5-minute candles was around 1.0265. The price right now is 40 pips later. So to me, this is a trend on the larger the trend, and that's why I want to see EU drop further and further, because when we get that reversal, it will be a no-brainer, easy money for me. So look at this. So at this point, in any case, I might just sell US30 at this point because we had closure below this static trend line. So if we get a retest off of this static trend line, I will sell US30 at that point. We have everything is bearish at this point. Gold is the only one, and our gold position is still in profit. But remember, they don't always have to move directionally. So let me. This is this trade on gold, short position right there. Ideally, you want to wait for closure below. You want to wait for closure below that trend line, right? Because it's a static trend line. But remember what I talked about, you have one shot to trade static trend lines. So you can do a quick trade and scale out. So you have one shot to catch a quick trade on the trend line. So for this one, I will enter the sell right now on US30, 50 pips, stop loss 50 pips, take profit. Stop loss is risk is 0.5%. If you guys want to use that for this particular trade. So we were up for the other trade. If you made money, well and good. I missed the buy at the top. The stop loss is above the trend line. And what else? Stop loss is above the trend line. Stop loss is above a supply zone. So yeah, to me, this makes sense. The trade to me is valid. We are also around an hourly bearish high zone, hourly bearish low. We have the weekly open. So this makes sense to me. Now, yes, they definitely can use these bearish zones as bullish zones. So don't lose sight of that. But for now, the trade to me makes sense. Gold. So same thing, as much as it's a filler trade, I'm not going to re-enter. I just wanted to see this happen, right? Filler trade is ideally supposed to show you the direction, not necessarily make you money. The second and third trades are the ones that you can look to make money from them. Perfect. EU moving perfectly. Okay. The other thing I'll do right here is check the channel. Still in a bullish channel, but you can see these two channels are trending to the downside. So that's fine. I would only be worried if this channel was trending to the upside. So these two channels are trending to the upside. Then, okay, I'll just leave that. Whatever happens to that trade, let it happen. So filler trades, how do you know when to exit the filler trades? For me, since I'm looking to make money from the second and third trade, I normally don't close them, but if it gets to what point? Maybe if it gets to the second entry, that's where you can look at closing. But since the filler trade, the stop loss is so far up or so far away because we're using 100 pips, TP 100 pips stop loss, we're using a 0.125. So for like a 200K account, you're only risking 250 bucks. So to me, I just think of the 250 bucks as the ticket I have to give the market for the market to show me, hey, can I make maybe 5,000 from this? So it's just like, think of it as a movie ticket, right? You're paying to see something. So that's how I like to think of filler trades. And if you think of them as just like a entrance fee or admission fee you pay to the market so that it tells you whether this is going to play out, you're really not going to worry about 0.125%. What else is there? So there's no high created on here. And also we have the 9 EMA. So when price comes, let me see, there's something I'm looking at. I'm looking for a possible, but just personally, I'll look for a possible size in around the 9 EMA. But that's just going to be my own trade. Let's see. Trying to draw trend lines for today. Does anybody have any questions for anything we've gone over today? All right. Okay. So let's go over this. So every day I did say we are, so for this account copying the signals from my live $1,500 account, even today was a break even day, or I made like what, 200 bucks on it. Yeah. So I'm testing out also the times, different times when the signals are being taken. So this is ideally taking signals from around mid-Asia, US 30 NAS and gold signals from around mid-Asia to before New York Open. I have another account that's taking from around New York Open. So actually, let me see if it took any. Yeah, so from New York Open to maybe mid-New York. So I'm just testing out a bunch of variables. So yesterday, every day we are going over 6 statements from the Trading in the Zone Attitude Survey. So this is the book I definitely encourage or heavily encourage you guys to go and buy and read. It's going to help with your trading psychology a lot. So every day we'll be going over 6 of these questions. Since the questions ideally are 30 questions. So if we do 6 a day, we'll ideally have completed that by the end of the week. So yesterday we went over the first 6. Today we'll go over the next 6, so 7 to 12. So number 7, I wouldn't even bother putting on the next trade if I wasn't sure that it was going to be a winner. And US 30 is coming back down. Personally, I sized in here with a similar lot size. So right now I'm up heavy. I can ideally close both positions, but also to me, the position is still valid. The only thing to consider here, and I think again, this is on me again, and I need you guys to remind me, because we had entered a similar position last week. So remember, when entering a position, it definitely is valid, but we want to wait for either retest of a trend line, retest of the 9 EMA, or retest of structure. And then we want to find the optimal point of entry. So as much as this was a valid entry down here, right, which would have been a better entry? A better entry, maybe what? Short position, retest of 9 EMA, or retest of 9 EMA, which coincides with retest of structure. So in any case, this would have been maybe a better entry. Yeah, so going forward, just remind me, because we had entered into such a position of last week and we got faked out, and US 30 came back into profit, but it stopped us out before. But yeah, so just remind me that, especially if I'm trading a trend line entry, just remind me of that. So I wouldn't even bother putting on the next trade if I wasn't sure it was going to be a winner. So, you need to ask yourself, how do you agree with this, or do you disagree? Ideally, for any given trade, leave alone whether it's the next trade, whether it's the first trade, you need every trade you put in. Of course, you don't know if it's going to be a winner, right? You only have the probability. You only have, maybe it has an 80% chance of winning. And of course, nobody's getting into any trade thinking that they're going to lose. So for any trade you enter, whether it's the first one, the second, the third, or whatnot, make sure you have a high probability of winning, and also make sure the trade makes sense. So same thing with this US 30 trade. As much as this trade has also retraced into drawdown, and we could have possibly gotten a better entry, like for example, for me, I'm in 2 positions I sized in here. This trade is still valid because the entry is part of the confluences we look for. But you can always improve your confluences, right? You can always look for the most optimal point. So if you have like 3 confirmations you always use to enter into a trade, you can always look for, okay, of the 3 confluences, which is the optimal confluence, right? So this trade, the first trade that I shot up right there, I knew it had a high probability of winning because I did test it out on the live session yesterday. As much as I didn't call it as an official trade, I tested it out personally and it worked out. So it's the same pattern that repeated itself today, and I entered it. So that trade made sense. This trade also, it wasn't a FOMO trade. It's a trade that made sense because it was off of a retest of the trend line. Now, yes, we could have gotten a better sell up here, but that's just something different. So yeah, always make sure that the probability of you winning any trade is high and you're not just FOMOing into a trade. And this also, you guys saw this in play for number 7 when US 30 came back down to this entry right here. So personally, so with this official trade, I hadn't gotten filled into this trade. So when price came back down, I said, if I already missed a trade, as much as I'd marked this as a buy, does this, what's the likelihood for this to win? So whatever I wanted price to do already did. So there's no need for me to hop onto the trade and just use hope and say, okay, maybe price is going back up. So I said that price comes back down, you guys should be at break even. And I did say personally, I'm not entering that trade because to me, the probability of winning a retry of that trade wasn't high. So I said, you know what? I don't think that trade is going to be a winner, so I'm not going to enter that trade. So simple. So ask yourself, what's your attitude towards number 7? Number 8, the more a trader learns about the markets and how they behave, the easier it will be for him to execute his trades. Absolutely. I mean, you guys have seen this live, right? I always say, like, nowadays I say it's so easy. Trading is becoming, I've noticed that for me, trading is becoming so easy because I have all these strategies that I've developed. I have all these strategies regarding trend lines, and I've tested them out day after day. This particular buy I called here was off of what I tested yesterday on the live session, and I called that trade. Trade went into profit. 50 pips, our TP was 50 pips. It went into profit 47 pips. That worked out. All these strategies that we use, retest of the trend line, retest of the 9 EMA, yes, trust me, trading does get easier over time. So yeah, the more you learn, the more you practice, you trust me, you will realize that trading at the end of the day, just make it simple. Trading is not hard. And so long as you keep learning, it will become easier at some point. My methodology tells me exactly under what market conditions to either enter or exit a trade, right? So for every trade that we enter, I do say that if you're 50% in profit, set break, either secure half and set break even, or just take your profit as you please. And I always give the percentage risk that you should use for every trade. So for me, I believe for all my strategies, I always tell you where to enter and when to exit a trade. I don't have any mental stop losses. I don't have any mental take profits. Right? If I had a mental take profit here, I could have probably been bragging to you guys, oh, I would have made an easy 30 grand on this trade if I didn't take profit here. But you know what? I don't want to, right? I had a take profit, that hit, I closed out, and that was it. Leave what could have been. Everybody is a millionaire mentally or in the demo, but when it comes to live trading, that's when that's what separates the people who actually do from the people who keep wishing. So number 10, even when I have a clear signal to reverse my position, I find it extremely difficult to do so, right? So this is the holding on to losers and exiting winners earlier. Personally, yes, I am still struggling with this. I am still learning or trying to work on this, because sometimes, right, even though I'm in a trade, I'll just let it hit stop loss as much as the trade is going against me. But to me, I can afford to do that because I have a set TP and I have a set stop loss. And before I enter any trade, I know the risk to reward of that trade. The issue is, the issue with a lot of people is over leveraging, and then you end up losing more than you're winning. So for me here, even though I've let, like, for example here, right, all these returns that we are tracking, I have a set TP and I have a set stop loss. So as much as like here, we lost minus 1.25% for the day. And as much as some days we've had break even, or we haven't traded, or the return is just zero for the day. I forget what this zero stood for. I think it was break even then. Yeah, as much as we've had that, we are still net positive, right? So for me, I can afford, as much as I'm still working on cutting the losers early, like it's something that I'm definitely not struggling, but I'm working on. My risk to reward, my risk management makes it so that as much as I'm still holding on to losers, when I lose, I don't lose that much, and it just aligns with my risk management. So make sure, and I know a bunch of traders are struggling with this as well too. This is one of the major things. So make sure, as you continue working on number 10, make sure that you're not over leveraging, make sure that you have a set TP and stop loss, make sure that you know what risk you're applying for each trade. And if you do that, you'll just keep working on it slowly by slowly, and maybe after a few months, you'll be all good. Number 11, I have sustained periods of consistent success, usually followed by some fairly drastic drawdowns in my equity. I used to be that way. Ideally, if you're doing this, it's over leveraging. If number 11 is you, and it's not a bad thing, right? Don't feel bad about answering no or agree for some of these questions. Ideally, you're just looking to better yourself. But if you agree to number 11, more than likely you're over leveraging, more than likely you're FOMOing, more than likely you're using mental TPs and mental stop losses. I used to be that way. I used to win a lot, and then at some point I would enter into a trade, no stop loss, and then I end up blowing my account and then starting over again from scratch. So
honestly, Vising, my advice for that is get a trade manager, because until I got this trade manager, I was doing nothing but mental stop losses.
Yep. So yeah, get a trade, and we've gone over the trade manager. Let me see if I can remember. But I think everybody who's here knows what I'm talking. If you don't know, let me know. But I think everybody who's on this call has seen the trade manager that I use. I forget. It's called Trade Manager. Who was it by? Info. Anyway, let me see. If I go to the Discord, I know, and I search here, we'll see it. Trade. It's only $100 per, forever. So to me, that makes sense. If not, there's a free one, Trade Manager by, not the Trader Dale one, InvestSoft. So Trade Manager, InvestSoft. So this is the one that I use. It's $100 forever. So you just buy one time. So it allows you to define your risk before you enter the trade, allows you automatically calculates the lot size for you, the TP and stop loss, and does a bunch of things. Also on the MT4, if you right click on your MT4, you'll see depth of market tool. So that's a free one on your MT4. The only, and I think US 30 is back in profit. So this is, and this is why I can do all these other things with you guys, and I'm not out here just watching the trade because I trust my trade. And you can see we have a death cross also coming in. So some people, right, you can be like, oh my God, you know, this. So another area to size in would be closure below the hourly bearish high, bearish low. And also, right, automatically, what do you see on the hourly time frame? Remember, static trend lines will almost always get retested. So price is likely to come at the very least to this high low around 33,721 or around the trend line area, which lines up with 33,721. So, right, it's no brainer. If a trade makes sense to you, enter the trade. Let whatever happens happen. Yeah, if you right click on your MT4, you'll see a depth of market tool. And then you can enter the volume, the lot size, and then your TP and stop loss. For indices, it's in the thousands. For FX pairs and for gold, it's in the hundreds, and for FX pairs, I think also it's in hundreds. The only thing with the depth of market tool, it's also a trade manager, but you can't set break even compared to the other one I showed you guys. You can't, it can't automatically calculate the risk for you. So you have to know, okay, for me to do a 50 pips stop loss, 50 pips TP, and to risk 0.5% on a 200K, I need to do like a 20 lots, I think. Yeah, 20 lots. Yeah, but if you don't have the money for now to buy the $100 one, use the free one on MT4. Okay, then the last question for the day, or the last thing for the day, is when I first started trading, I would describe my trading methodology as haphazard, meaning some success in between a lot of pain. I mean, I think this is a yes, and look at that trade. So for me personally, right, I'm in two trades. I'm in this one and I'm in a sell from here at this top right here. So I just actually hit take profit. And so this is where you can, if you guys want to size in, this is a sizing area because we are in an hourly bearish high, hourly bearish low, but ideally you want a retest of these zones. But personally, my first trade up here is about to hit TP. And again, I did, since I'm up 7.5 for the day, I risked $5,000 for each of these two trades. So you can do the math, right? So for this particular day, I will be up pretty heavy. Let me see, custom period. Today. Oh yeah, I'm up like 10% for the day. Yeah, so number 12, right? To me, this is a yes. If you never experienced this, then maybe you grew up in like a trading family or whatnot. But when I first started, it was just, I told you guys, I've told you the story about me and Audrey, right? Somebody just used to tell me buy and I just blindly buy. Somebody used to tell me sell and I blindly sell. And that's also another particular reason why I still even had issues giving you guys signals, because I don't want you guys to, especially if you're a beginner, I don't want you guys to do what I did and then to say, oh, Michael's signals, you know, some of them are winning, some of them are losing, right? And of course, that's the signals. But for signals, I always say, let the signals be like a traffic light, be like the Google Maps for your whatever maps you use to travel. You know, let it show you that you're 20 miles away from your destination. Oh, you're taking a right in 1 mile, right? Let it not just tell you, right? It tells you take a right in 1 mile. It doesn't tell you take a right here and until you get to that particular spot, of course. But let the signal, if you get a US 30 sell on the 5 minute, go to the chart, interpret the signal as, okay, US 30 is possibly going bearish on the 5 minute time frame. So what do? You come in here, open the, okay, this trade should be at break even because it's 50% in profit. And there's no need for you guys to leave money on the table at this point, right? You don't want, rarely will our trades go back and hit break even. I think that has only happened like a couple of times on the live session. Some of these break-even days is when we had a losing trade and then we had another winning trade and then ended up the day at break-even. But we've had very few times on the live session when a specific trade goes 50% in profit and then comes back and hits break-even. So this happened today, and at this point you should have closed at 47 pips in profit. Yeah, so US30 sell 5 minute, interpret that as, hey, on the 5 minute time frame for US30, there's a possible sell forming. So you come in here, you do your thing, right? You come in here, the first thing, draw your trend lines. Draw your trend line on the hourly. Where's price coming from? Price rejected off of a static trend line on the hourly. We have a static trend line on the 5 minute. Price closed below. We have the 9 EMA. At this point, you get the sell signal and then you wait for the entry. I don't know at what candle the sell signal came, but then draw that. If you want to enter on impulse, go ahead and enter on impulse. If not, then, and at also this point, I will close. I don't know what to do with this. I'm also in this trade. I'll set break even. No, actually, I will close 50% and I will set break even. Interesting. Because I did. Do I have to do it? Oh, okay. Okay, there it is. 50% and move stop loss to break even. Okay, perfect. Because I was in with a 50 lot. So this trade was 50 lots. The other trade was 50 lots. I already made my 5 whatever on the first trade. Yeah, so that's the last of that. So go ahead and do 6 questions a day, day after day, day after day. Keep repeating them. Get the audiobook for this book right here. If you can buy the paper book, go ahead and do it and read it. And trust me, in 1 year, you will be an amazing trader. So today we are, let's see what happened with gold. Gold is still playing around. EU is the other one we've been waiting on, right? So this is what we want to see right here. Right, this is what we are waiting on. We are waiting for price to close above the 9 EMA on the 5 minute, to retest and close above the 9 EMA, and at that point, right, we're golden. The only thing to be concerned about for EU, so same thing, the difference between the heavy trade I took last night was that I was only in, it was a sell, and I was only in supply zones. But here, we are looking for a buy, but we also have a supply, a big supply zone. You can see if I hover over it, the supply zone ends at around 1.09446. So this is the only, so if you ask me, I wouldn't go in, maybe for this trade, I'll call maybe a 1% risk. Maybe no, 0.75% risk. But if we didn't have this supply zone in here, then it's a trade I would have said yes. But definitely this is a heavy trend, right? The last time price was consistently above for 2 consecutive 5 minute candles above the 9 EMA was about 50 pips ago. So that is definitely a trend. But let's see if this trade will hit take profit. If not, at this point, you guys should have secured. So personally, I've secured. So for today, the returns that I'll get, if this trade hits break even, I'll just count the percentage that I took, the 0.5% or whatnot. Does anybody have any questions? But you can see if we had a sell here, what is likely to happen, right? Price is likely to retest the trend line, retest the 90, either the trend line, which is up here, either retest the structure. So it's not like, as much as we might get stopped out, what is the better entry? So we have an entry from retest of structure, we have an entry from retest of the trend line, or we have an entry from retest of the 9 EMA. Of those 3 entries, which is the most optimal entry? It's the retest of the trend line, which aligns with the retest of the 9 EMA. And so same thing here, 50 pips stop loss, 50 pips take profit. But that's if you are trading that signal that came up. But this also is a valid trade even on the live session. Do I feel like taking it? Honestly, no, because I'm already heavily up for the day. I'm already in this position. So it's the same thing as this. The reason I didn't take this buy again up here, because price can easily come back up, go back, fake you out, and then keep going back down. So you can see even on the hourly, price is in between these 2 trend lines. So this is an area of fake outs. And you can see even the 9 EMA and 200 EMA have ideally been around each other for for the last few hours. Yeah, so now is the time. If you guys have any questions, go ahead and ask them. I'm just looking at my other accounts. Yeah, yeah, you guys can ask any questions if you have any.
Yeah, just wanted some advice, like how do you handle like your different accounts? Do you like have an account where you go heavy, and another account where you like you have low risk, or it depends on the amount you make on a daily?
So yes to every question you've asked. Okay, so if you're starting off as a trader, so I guess the question to you is, how many do you have any funded accounts, or do you have a couple of funded accounts, or you're still trying to get funded?
It's a question for me.
Yeah, it's a question to you, because that's going to
Yeah.
depend on how I answer that question.
I have a live funded account, and I have a challenge also, 200K funded, 200K challenge.
Okay, give me one quick second here. Okay. Okay, so personally, I have an account that I don't care what happens, I go heavy. So high risk, high reward, right? I have an account like that. I have an account that I'll just make 100 a day, 200 a day. And then, but so these accounts that I have low risk on, I copy them to all of my accounts, because if it's 100 a day, I'm really not over leveraging with that parent account. So that account I'll copy to all my accounts, but the account that I go heavy on and just trade however I want, that account is by itself, because I can blow it in trust me, I've blown it in like a minute or something. But that one is not tied to anything. Now, if you're starting off as a trader, my advice, or if you're starting off with your first funded account. So number one, as much as, it's not a bad wish to anybody, you will almost always blow your first funded account. That is part of the journey. If you don't, well and good, but more times than not, you will likely blow your first funded account. But let's assume you've already gone past the blowing your first funded challenge. Once you get back your other challenge, remember, I did this math for you guys, right? To make 120K a year, you only need $200 a day, if I'm not wrong. So for your first funded account, if you're employed right now, aim to make half of what you make at your current job in a month. So even a month before taxes, you make $5,000 with your first funded account. And I'm just using 100K because I don't really trade accounts that are lower than that, unless it's helping other people out. So aim to make half of what you make at your current job for the first month, and aim to do that consistently for 6 months. Now, in that 6 months period, make that, whether it's $100 a day, that's going to make you have, make 100, because remember, it's never about the money. Before you're born, there was money on this planet or on this world. After you die, there's going to be money left. So what you're trying to do is actually not trying to make half. What you're trying to do is to discipline yourself. Is to discipline yourself, knowing that, okay, for me, that's 200 a day, that's 1,000 a week. So if today I make 200 and there are no other trading opportunities out there, I'm done for the day until tomorrow. If there are other opportunities and I can make the 1,000 in 2 days, I am done for the week unless I get an A+ setup. That is the reason you need to do that, not to make the 200 a day, because you already know that, hey, I expect to make 200 a day. You're not gambling. Do that for the first 6 months. After you've done that consistently for the first 6 months, for the next 6 months, aim to make the same amount of money you make monthly at your current job. Whether that's $5,000, even though you have a 500K account, don't get smart. Make $5,000 a month on a 500K account consistently for the next 6 months. Now, during this period, and I'm only assuming that's one account. So during this period, hopefully you get funded with other accounts. Separate your accounts. Have Dean calls it a YOLO account, which is that account I say that I can blow it in a minute, because I'll go like 100 lots with this account, high risk, high reward. But still, it's not like I'm FOMOing. I'm looking at possible entries. or I'm looking at high probable entries. The other way you can do it, I think, let me show you guys this thing right here. I think and always document your plans, write down your plans and document them. Okay, let me share this with you guys. It's just a nifty little thing I had to draw up for myself. So let me unshare this, and then I'll just go ahead and share screen and share Notepad. So this is, hopefully you guys can see this. So this is and I think I wrote this a while back. So I said, my goal is to have multiple accounts. So I wrote down, look at your life. What are your biggest expenses, right? Give me 1 second. I need to change something for one account right here. But just look through that list real quick. I need to change this to, what do I need to change it to? That's one to that. Okay. Okay, I'm back. So I asked myself, what I found that I was blowing a lot of accounts, losing a lot of money, even funded accounts, because I wanted to make 1,000 a day, 5,000 a day. So like literally today, I'll send you guys a screenshot of what I've made. I've literally made 10% of a 200K account. That's a lot of money. So there are days I used to make $500, and then I'm like, God, but in the past I've made 5,000 a day. So I used to try and make 5,000 a day, but if you've never made 5,000 a day, listen to me. You don't need to make 5,000 a day. Nothing is going to be different. Sure, you can go shop for amazing things, but if you don't need I don't want to say you don't need 5,000 a day right now, but if you've never made 5,000 a day consistently in the past, don't go for 5,000 a day. So I asked myself, I'm losing all these accounts, but if I just even short for $100 a day on a 100K account, or even $50 a day, $50 on a 100K account, 50 a day, 50 times 5 is 250. 250 times 4 in a month, that's $1,000. And that's even because people tell you, why get a 100K account if you're only going to make $50 a day? Remember that if like how I'm app heavy for the day to day, as much as I've made that money, sure, you can feel, oh, Michael made this, but remember, I'm not going to come and pay your mortgage for you. So don't listen to people who say, oh, why get a 500K account if you're going to make $100 a day? It's your own life. This person is not helping you pay your bills. You also don't know whatever this person is going through. So even though it's 100, so I ask myself, hey, I blew this 100K account, and then it took me 4 other months to get funded, and I ran through like 5 more challenges, passing and failing, and lost like 10 grand or 5 grand trying to get another 100K funded. But if only I'd just made $50 a day for that previous 100K account that I blew 4 months ago, right now it'd be up 4,000 for the day. So I told myself, I'll get separate, I'll work on getting multiple funded accounts. One account, I designate this to my rent. What's your rent? For some people, it might be $500 a month. Others, it might be 1,000, 2,000, 3,000. So I said, I'll get 100. So I always base all my challenges off of 100K. So I'll get a 100K account. And if my rent is 2,000 a month, guess what? For this 100K account, I'll try to make 2,000. If I make $2,000 in the first week of the month, I close that account and wait for my payout, and then rinse and repeat the next month. And then I said, okay, I'm losing money doing challenges, or not losing money. I'm paying to do challenges. I also have a credit card. So for me, I use my card for every payment so that I can track it easily, because I don't want to track payments in different places. But people are different. So I said, I need an account to pay for my credit card bill. So how much is your credit card bill? Might be 500 a day. I'm sorry, 500 a month, 3,000 a month. Get an account specifically for your credit cards or for your debts. Get another account and say, okay, I need to put live money in the market. So I need my own 10K, my own 20K, my own 5K. Get a challenge that feeds your live account, whether it's on Hugo's Way, Liquid FX. Another one, get an account to do investment. Remember, trading, you need to put effort in trading. So maybe you've always wanted to do, I don't know what, cooking. Like for me personally, I want to have like a food truck. I want to have like a small restaurant. So I have an account that's making me money that eventually I'm going to use to invest. It might be also investing in stocks or crypto or whatnot. Okay. The other one, I need an account for entertainment. Hey, I need a good night out every so often. I need to, for example, how I'd gone out of town to see some Dean and Stephen in here. I said, okay, I need my own account to go and do whatnot. The last one, high risk trading. So I call this the FOMO account. This is the account that you go heavy on. You wait for a good strategy. You go 100 lots. You go 50 lots in. You have your max drawdown set. So maybe you're using your whole daily drawdown. Go in. You risk 5,000 bucks. You make 15,000 bucks. At the end of the day, these accounts are separate from each other. So the only account I have copying to all these accounts is a small account that I aim to make maybe 100 bucks a day, because I learned that, oh, hey, 100 bucks a day is honestly 2,000 a month. So I can easily copy that to all these accounts, and it's feeding all of them. So write down your biggest expenses in your current life, and then break them down and try to break them down into maybe 4 categories, so that you can have 3 funded accounts that can deal with that. And trust me, once you do this, eventually, you know what's going to happen in a year, 2 years, 5 years? Your rent is going to be paid by trading. Your credit card bills are going to be paid by trading. Your personal account, you're going to have a personal account that's funded by trading. You're going to be making investments that's going to be funded by trading. And so ideally, everything in life will be funded by trading. At that point, why do you need to work for somebody else, right? No reason. I remember way back when I started, because before I was trading, I used to talk about investing and all of that. I remember there was this thing about you need to save frequently, invest wisely, and save frequently, save frequently, spend wisely, and invest prudently. So those 3 things are the goals to financial freedom. And guess what? If you break down all of that, you realize at the end of the day, because most people go to work because they need to pay rent, go to work because they need to pay food. So my rent is taken care of by trading. My food, which is I track in credit cards, is taken care of by trading. My investments are getting taken care of by trading. So why do you have to quit? Why do you have to work for somebody else? So yeah, do this, write it down, break it down, and then get accounts to help you do that. And then give yourself time. That's the other thing. It takes time. You know, people go to college to be a doctor, or med school to be a doctor for 7 years, 5 years. They have to go through the whole 5 years. So if this is going to take you a year, 6 months, 2 years, 3 years, remember, if you're new to this, or if you haven't been consistent in the last 4 years of trading, tell yourself, today's the day I start afresh. I'm going to be a more disciplined trader. I'm going to get a challenge to help me pay for my rent. And then trust me, and then say, I don't care if for Michael it took him 6 months, which it didn't, but if for Michael it took him 6 months, if for this other new person, there are people who pass challenges in a day. It says that's fine, that's their own journey. For me, until all I know is that I'm not gonna give up. When I'm ready, it's gonna happen, and I'm going to keep pushing. And trust me, if it takes 1 year, 2 years, 3 years, 5 years from now, you're going to show up and say, hey, Mike, I just sent you a Lambo, just sign for it, right? You're going to be like, that one thing you talked about that one day, it helped me a lot. So yeah, just break it down. It's not hard. And then you'll be amazing. You'll be an amazing trader. But yeah, does anybody else have any questions? This trade, trying to share my screen again. So that one, so for me, this trade, I got taken out at break even, but I secured half. For the day, I am up about 10 or 11%. So at this point, I really don't need to keep trading. Let's see what we have. EU, right? This is what we want to see. And this is another good thing. You always want to draw like based on what you're looking at, you want to see where is price likely to head. So go ahead and draw this. Also, that's going to help you into help you against hopping into trades early, because here EU literally followed what I marked up. So right now, it's in an area of interest for me, but I just need to wait for that confirmation. 2 5-minute candle closures above the 9 EMA, and then it makes sense, because you're better off than the person who forward and bought up here, than the next person who bought up here. And I've learned this by blowing a lot of accounts. So I'm just telling you guys what I've learned over time. And it's working, and I'm doing all these things live for you guys. So yeah, does anybody else have any questions? I can hear my coder pinging me. So I'm getting that indicator, the reversal indicator developed, and that will be available to you guys. You can see gold is ideally ranging. I have another, I talked about an EA I'm having developed that ideally will be hands-free. All you need to do is set and forget. One of the coders that was primary on that project dropped off. So I told you guys that the EA I'm having built I've never seen anything like that before, and it's gonna be like, when I tell you guys it's hands-off. So I have like 5 or so programmers or something working on it. So based on how it's complex, I just hired another programmer. So we'll see how long that takes to work. But I'll let you guys know what I find. Does anybody have any questions? If not, we'll call it a day. Let me go ahead and record this game that we had. So this one I didn't enter, so I'm not gonna count it as much as it was an official trade. Here, remember, I don't care about showing that I'm winning. Like there are days that we win even from an official trade, but because I didn't take it, I'm not gonna count. But I just want you guys to make money. Don't worry about the little returns that I am not getting or that I miss. So this was a 0.5% risk. At this point, halfway off, you were up 0.25. So I said secure half. Yeah. So for today, you should be up about 0.2% for the day, or 0.25. So yeah, that should be it. And you can see for 4 weeks, you should have been up about 5%. Yeah, so we'll keep tracking this every day and then see how it's going. Now, Friday, here's another thing. Friday, we won't have a live session because I have to do something. I'm actually going on vacation from the 28th to the 3rd. So I'm flying out to some other place. So we won't have a live session on Friday. We won't have a live session possibly Monday, Tuesday, and Wednesday of the new month as well. If any of the other admins are free to do live sessions with you guys, I'll ask them and then they can do it. If not, our next live session will be next week on Thursday. I can try and do a live session maybe on Monday and Tuesday because it's only an hour, even though I'm on vacation, but we'll see how that goes. But does anybody have any questions regarding anything we've gone over? Okay, perfect. Now going forward, US 30, what do you need to be on the lookout for, right? Look out for this trend line on the hourly. It's an established trend line. If we get this hourly trend line closing above, hourly candle closing above this trend line, you need to wait for the next hourly candle to see what it's gonna do, right? To see whether it's going to break back below or break back above, and then you can easily find an opportunity. Gold, we are just in a filler trade, so nothing really on gold. EU, this will be another trade of the day. EU, we are looking for closure above the 9 EMA on the 5-minute, retest and closure above, and at that point we get into a buy for EU. So I'll try to send that out. Let me actually just turn on my alert for that, and I'll tag you guys in the group. Euro USD crossing the 9 EMA, so I'll just turn that on. Okay. Any last questions from anyone? Hopefully you guys had an amazing trading day. I will see you guys tomorrow. Yes, tomorrow. All right, bye guys.